You still see the 10-year yield moving higher from here, even though some people say that maybe we've seen the highs for the year put in already. What's the backdrop to get you to 3.5 to 3.75?
The backdrop, Melissa, is that we are going to continue to see very high inflation rates. We have July 13th, next Thursday, we are having the CPI come out for the month of June. And the last time was a 40-year high of 8.6%. We may either match it or even be above it when we get the number for the next month, the month of June. We are also having the uncertainty on the global side with respect to energy. We do not know what Russia would do in terms of a response if we were to put a ceiling on the price of oil on the part of European Union countries. They may just cut the oil back by several million barrels a day. Keep in mind that if you have a total global oil demand supply at 100 million barrels a day, there are three major producers, Russia, United States, and Saudi Arabia, each with about approximately 10 million barrels a day. So if 5 of them is cut back, it is going to cause oil prices to shoot up. That in turn will push inflation up. Rents are, I think, still going to be a factor in the United States, and wages are going to keep increasing. So these are various factors which I think will contribute to high inflation rate. And you saw what happened to the 10-year today. We hit an intraday high of 298. We're almost back to 3%. And I think after next week's inflation rate, you will see probably a even higher 10-year yield.
What happens to the 2-year yield? And I'm asking, even with the 10-year yield rising, do we still see an inverted yield curve? And does that signal anything to you?
It signals a lot, Melissa. One, I expect the 2-year yield to keep going up, but then 2-year and 10-year typically do a catch-up game with each other ahead of a recession. That's what we saw in 2006, 2007. So far, by my calculation, we have had 4 inversions since the beginning of April. And this one yesterday and today seems to be persisting. And when the 10-year rises sharply, you're probably, again, going to come out of inversion. You're going to see a positive yield curve. Then there'll be fear about the Fed tightening too much. Then the 2-year rises. That's how a recession gets born. The problem is the Fed doesn't have an alternative, Melissa. They just have to keep going with tightening because they made a serious mistake in not estimating inflation correctly last year. And as a result of that, there is no way to make up for it. And they simply have to keep tightening, even if it leads into a recession, because otherwise inflation is not going to come down.
Right.